Data released this week shows that Japan's manufacturing activity picked up in the third quarter, but economists say they need more information on wages and consumer spending to determine whether the government should raise the sales tax once again. I'm on the line with Rick Lloyd, Senior FX Analyst for Thomson Reuters. Rick, welcome to Dukascopy. Now, Chinese manufacturing rose just barely yesterday, a bit of unexpected good news. Were you expecting this?
No, Sinead. Both I and the market was worried that it would come in under 50 and show that the Chinese economy is contracting. But the surprise rise from 50.2 to 50.5 was fairly short-lived, as although the new orders and new export orders were positive, the employment index was actually negative. And today we had another survey that's not really so widely watched, the Westpac MNI China Consumer Sentiment Index. That dropped from 113.3 to 113.2, and again the employment component of that index fell for the fourth straight month. So I think the market's concerned about the lack of reaction to these weak numbers, and also looking at the employment situation in China.
Japanese manufacturing activity eased slightly in September, but output rose at the fastest pace in 6 months. Does this mean industrial production is finally stabilizing after the sales tax increase in April?
Well, again, it's sort of similar to the Chinese data yesterday. There was something in it for everyone. You know, there was obviously the bad news of the headline fall, but the good news about the output index rising. I think the market's not really convinced that the Japanese authorities are correct, because they keep assuring us that the economy is on track for recovery. But I think that the market's concerned that they're not really living up to what they need to do on the fiscal side. Certainly, the Bank of Japan and Kuroda have delivered on the monetary policy side, but that it's taking time for Abe to actually get new laws enacted, and I think the market thinks that the BOJ may have to do more before this is over.
Now, looking to the end of the week, there's a lot of data out for Japan. Now, probably most importantly is the Japanese inflation rate. What do you expect to see from this?
Well, we're looking for actually a small decline from the previous month in the headline number, from 3.3% to 3.2% annually, and in the core CPI from 2.7 to 2.6%. And here again, I think the market's beginning to wonder if everyone in Japan has really done enough to get this lift off that they keep talking about, and if the economy has really been able to shake off the effects of the sales tax that was in April. And of course, we've got the decision before the end of the year on another sales tax hike. So I think the market really is looking for more from Japanese authorities, but they continue to be fairly sanguine.
Thank you, Rick, for your comments. We'll have to wait until Friday to see what happens with Japan's inflation rate. But for now, that's all from myself. But the Dukascopy TV website is updated regularly, so do tune back.